Hi everyone, this is Mark with Ease Investing. Welcome to this video. We're going to talk about the most common way that most investors participate in the stock market. This is by owning and then selling stock shares. In this example, we're going to use the stock SoFi. So most investors make money in the stock market by buying stock shares and then selling those stock shares when they're worth more money. Let me show you how they buy stock shares. In Robinhood, you would click Trade, you would click Buy, you would select the amount of shares that you would like to own. We'll put in 100 shares. We can see that the current stock price of SoFi is at $13.64. So to buy 100 shares, when each share is trading at $13.64, this would cost $1,364. So investors would buy this hoping that the stock price would increase. So in this example, if SoFi increased from $13.64 to $14.64, so if the share price increased by $1 and you owned 100 shares, you would be making $100 if you decided to sell those shares when it was trading at $14.64. So let's get into how you would sell those shares. We'll exit out. We'll go back and we'll click Trade. We'll click Sell. If you owned 100 shares and it went up in value, or let's say it went from $13.64 to the $14.64, you would sell 100 shares. And that's how you would make money, is if the market price said $14.64, you would be getting a credit for $1,464. You would be profiting $100. Keep in mind, when you are buying and then selling shares, the only way, I'll repeat, the only way for you to make money is if the stock price increases. If the stock price decreases, you 100% of the time lose money. Let me ask you a question. Did you know that you could make money when a stock price decreases? This takes extra knowledge. This knowledge is understanding stock options. Stock options can be confusing depending on who's explaining stock options, but they are very, very simple to understand. Another word for stock options are stock contracts. So when I say stock contracts, that's the same as me referring to stock options. With stock contracts, there are only 4 contracts to understand. Let's get into how you would access these contracts on Robinhood, and I will briefly describe each contract and show you how simple they are to understand. By increasing your knowledge, this will allow you to make money in the stock market, whether a stock stays the same price, whether the stock increases in price, or whether the stock decreases in price. If right now you only have knowledge of buying shares and then selling shares when the stock price increases, that's an excellent first step to have. But just know you can increase your knowledge, and by increasing your knowledge, this increases how you can make money in the stock market. So let's get into how you access these options, and I'll briefly describe each of the 4 options, and you will understand the basics of stock options in this video. So make sure you watch till the end. For this, you would click Trade. You would click Trade Options. Keep in mind, each of these 4 contracts, or all stock options, all of the 4 contracts have an expiration date. So we're just going to select June 6th. You can see at the top of the screen, it shows us all of the 4 options. You could either buy a call, you could either buy a put, or you could either sell a call or sell a put. Those are the 4 options to understand. Once you understand those 4 options, you understand stock options or stock contracts. Let me briefly describe each stock contract, and that way you have a basic understanding of them, and you know what people are referring to when they say buy a call. So let's start with buying a call. When you're buying a call, you are paying money up front and you are betting that the stock price is going to increase. That is buying a call. You are betting that the stock price is going to increase by that expiration date. If you are correct and it increases, that's how you make profit, or that's how you make money. If you are wrong, that's how you would lose the money that you paid up front to buy the call. So, buying a call, you are betting that the stock price is going to increase. Buying a put is the exact opposite. You are betting that the stock price is going to decrease. So when you buy a put, you're betting that the stock price is going to decrease by the expiration date. If you are right, you make money. So you can see by understanding these two options, you now understand that you can make money if a stock price increases or if a stock price decreases. That is buying a call or buying a put. If you understand those two, or the basics of those two, you understand half of stock options. Let's get into selling a call, and I'll talk about the basics of selling a call. So when you sell a call, this is when you already own 100 shares of a stock and you are putting a cap on your stock. So SoFi in this example is trading at $13.62. If I sold a $14.50 call, I am promising that I will sell the stock for $14.50 if it is greater than that by June 6th. For making that promise, I get paid money up front. So when you're selling a call, you are getting paid for making a promise of selling that stock for your selected price if the stock gets past that price. If it stays below that price, you just keep the money that you got paid up front. So think of selling a call as putting a cap on a stock that you already own 100 shares on, and for making that promise, you are going to get paid money up front. That is selling a call. Let's get into selling a put. Selling a put is you are agreeing to buy the stock if it decreases in share price. So in this example with SoFi, it's trading at $13.65. If I decide to sell a put for June 6th at $13, I am agreeing to buy SoFi stock for $13 even if it's trading, or if it's trading below $13. So if it's trading at $10, I still have to buy SoFi stock for $13. Keep in mind, each one of these 4 contracts, when you do one contract, so if I sell one put, it's dealing with 100 shares of the stock. So to understand stock contracts, it's really not that hard. You really just got to understand the 4 contracts, and everything that you hear about stock options deals with either one of those 4 contracts or a combination of those 4 contracts. In this video, we have discussed the difference between buying and selling stock shares and buying and selling the 4 stock contracts. When you're buying and selling shares, it's like you have a butter knife. And when you're buying and selling stock contracts, you have upgraded your butter knife to a Swiss Army knife.